Hello everyone, my name is Marc Workmeister. I'm with Professional Financial Advisors, and today we're going to do a quick video on the trade war and tariffs and all of the headlines that we're seeing on a daily basis right now, really since the election in November. So as we start talking about tariffs and the deficit and some of the things that the current administration is looking to do, I think it's important to start with a little bit of history that the United States has used tariffs before. Now you have to go back a ways to McKinley Tariff Act, Smoot-Hawley Act, Industrial Revolution. So it's been a while, because really since the Great Depression we've been in a free trade society, and that's led to a lot of economic growth. But it has also led to some jobs going overseas and some of our manufacturing industries being weakened. But it has been there, and really since 2017, we've seen this start to come back, as this has been a major policy of President Trump, both his first time around and this time around. So as we get started here, the first thing we're going to look at is the trade balance and why this is an issue and why it keeps coming up in political circles as well as economic circles. So currently, you see the trade balance, our deficit has been growing over time. So it's an average of negative 40 billion, meaning we're sending $40 billion, or we're importing 40 billion more than we're exporting, but now it's at negative 98 billion currently, so it's really dropped. And if you look at the big picture from just the trade deficit and why it matters, generally speaking, if we're relying on other countries and we're borrowing more goods and services, then that can weaken the economy. It can weaken manufacturing. It can weaken our stance on the global stage. But on the other side, it's kind of seen as a strength of the U.S. economy that we have so much purchasing power and consumer purchasing power that we are bringing in way more goods than we can actually manufacture because we're consuming so much. So part of the deficit is just to having a really strong economy, but it's to the point where the debate is how much is too much. And so we've seen President Trump, whether it's the 25% tariff on aluminum and steel, or some of the tariffs that he put on China, or some of the potential tariffs that he was going to place on Mexico and Canada. It's some of his protectionist policies are just that. He's trying to protect American jobs. He's trying to protect manufacturing. But on the other side of it, as I talked about, it can also lead to economic issues, as free trade has been really good for the overall economy. So when keeping in mind tariffs, part of the conversation has been revenue to the U.S., but it's important to look at our revenue sources as a complete picture of the total pie, because really tariffs only account for 1 to 2% of the total revenue. They're in the other category on this slide, which would be that 3.5, so they're part of that. And so tariffs are in the news, even though they don't bring in a lot of revenue. And it's ironic on this slide too, just to point out corporate tax revenue is also relatively low, and it's been in the news a lot. So some of the political hot buttons, it shows you why they're political, because they maybe don't have the actual impact as the headlines would suggest. Now, one direct impact that tariffs can have is on the currency. So since the election in November, you'll see this chart, that black line, which shows the strength of the US dollar. It has jumped since November relative to other currencies. So as we import less goods, that is going to keep the dollar stronger. Now, the offsetting effect of that is if you're exporting goods, if the dollar is strong, it takes more money from the people buying those exports to buy our goods because the dollar is so strong. So it can actually hurt the economy from an exporting side. The thing I think I would point out on this is we've seen this before. So we've seen some of these things where the dollar gets stronger, the dollar gets weaker. We've seen some of these political issues, whether it be tariffs or something else. And the market has remained quite resilient through all of this, and the economy as well. So even though the headlines are out there, a lot of times if you look at what we own, you look at the stocks in your portfolio, look at the individual companies, you look at the economy as a whole, you look at unemployment, a lot of those things really aren't affected by some of the things in the headline. So I think it's to keep in mind that even though tariffs are important, there are things like the currency strength that can have a direct impact. There are long-term trends which could start to develop based on these tariffs. Usually the market in the short term will overreact to the news based on what the actual impact is, but in the long term, it all kind of evens out. So you may see a jump on a single day or a drop on a single day based on headlines, but if you look back over the past, say, 90 days, a lot of those big ups and downs will smooth out and maybe not be as volatile as it appears just by listening to the news and some of those things. So I appreciate your time. If you have any questions, I encourage you to reach out, and I hope you enjoyed this video. Thank you.